Data. The modern markets are all about data. Now, most of us are familiar with price itself, but that's only the tip of the iceberg. Do you know that there are 3 different kinds of market data? Level 1, 2, and 3? Give me 5 minutes and I'll teach you about the second type and the power of level 2 trading. First things first, let's talk data.
Level 1 data is basic information such as volume, bid, ask, and last price. Level 2 data is more advanced. It lists the open orders for an asset while disclosing the market makers and volumes. Level 2 illustrates a market's true depth. Level 3 lists all of the data in 1 and 2. However, it is restricted to market makers as it gives them the ability to enter quotes, execute orders, and exchange information.
Level 2 trading is based on the concept of supply and demand. Traders use the enhanced market depth data to understand the market structure. By doing so, they can identify areas of potential support and resistance by observing who is trading, their size, and where the bids and asks are located.
Here's the basic anatomy of a NASDAQ Level 2 trading screen for Cisco systems. There are 4 vital bits of information to note. First, the market makers involved in the buying and selling of shares of Cisco are listed. The columns of letters tell us who is trading Cisco. For instance, GSCO stands for Goldman Sachs. The second bit of information is the price. This is represented by the bids and the asks. These are the levels at which market makers are looking to buy or sell shares of Cisco. In this case, Goldman Sachs is looking to buy shares at 110.25. Thirdly, the trading size of each order is printed. This represents the number of shares waiting to be bought or sold at a given price point. Goldman is looking to buy 10 blocks of Cisco. Last is the time in which the order was placed. All right, let's observe Level 2 in action. Okay, this is a real world look at a Level 2 trading screen from a major stockbroker here in the United States. Remember, stocks are cleared through exchanges, so they're great for Level 2. Most Level 2 traders are focused on stocks. So what we have here is essentially basically what we just looked at on our diagram. You've got your market maker's name, you've got your price, your bid, and your ask. Be forewarned, there's different types of Level 2 data, and some of the Level 2 doesn't give you the market maker's exact name. Right here, you can see these are exchanges and these are groups of market makers. Also, some of the retail Level 2 data that will be passed off and sold to you as Level 2 will just give you the bids and the asks and the volumes, and it won't even give you the market maker's name. If you're going to do this, you need to figure out who's placing the orders. That's probably the best way to move forward with any sort of strategy. Now, there's 2 basic ways that you can trade this type of information. And let's go ahead and roll this, and you can see exactly how quick the market moves when we kick off there. You can see just how much business is being done. Now, as far as I'm concerned, one of the basic ways to do this is to do a basic support and resistance type of a strategy. Now, for support, remember, support is a price point that's beneath price action that may constrain bearish price action, okay? May constrain falling prices. So what do we have right here? Take a look at our bid and our ask. Okay, take a look at our last price. Our last price for this IBKR is 57.52. Okay, so if we're looking at 57.52, and we're looking for a support zone, the biggest thing that we got to remember is that this price point is going to be beneath price and it's going to be a bid. So when we see all these price points, we're beneath the current price. We're looking at the bids. Where are all the bids at? Well, take a look down in here. There's some serious bids laying at the market from the NYSE, the NASDAQ, the ARCA, more from the NASDAQ. I mean, there's about 10,000 shares, maybe 12,000 shares right there between the price point of 57.26 and 57.20. Theoretically, if I was a bidder and I was a support and resistance player, I would look at those bids and I'd say, okay, I want to join the bid when price gets down to 57.25, down to 57.20. The idea being we join the bids. Price gets down there, it's at least a temporary floor. We get a bounce off of that, potentially either a very lively scalp or maybe we take a position for the rest of the day. That's the first way, buying support. The second way is going to be selling resistance. Now, it's exactly the opposite. You'll notice our ask side of the equation. Look at our prices, 57.56. We're right around there. We're right above price. We're above price. Take a look at where all the orders are lying. It's a lot like what we had over here on the bids. Look at the volume of orders right down there between 57.70 and 57.74. So we're looking at 57 and 3/4 here as being potentially a very lucrative buying opportunity, or selling opportunity. Why? That price is above price. That price point's above price. All of those asks are laying at the market. Theoretically, that's going to constrain your bullish price action and force price back down. It's going to be a temporary ceiling. So if I wanted to sell this market, I would be looking to join the ask and join the sells at a price right above our last price traded and potentially either try to get a scalp from falling price action or potentially take a short for the rest of the day. Now, of course, if you're trading stocks, your ability to short sell is limited, but if you're trading CFDs, either in Europe or in Asia or in Australia, then you may be able to use level 2 and incorporate that into your CFD trading so you can capitalize from going short just a basic stock like this. So that's basically it. You can sell resistance, you could buy support. There really is many ways to skin a cat. Those are two of the most easiest and basic ways of trading level 2 data.
Are you confused? That's okay. Level 2 trading is an advanced way of approaching the markets. It is preferred by high-frequency traders and intraday scalpers. Also, it is designed for exchange-traded products. If you're trading OTC assets, such as Forex pairs or CFDs, it will be a challenge due to the inconsistent volume and bid-ask data. All right, let's review. Level 2 traders use the depth of market data to identify who is trading what and where they are trading it. If there is a huge volume of asks at a specific price, then that price is potential resistance. If there is a huge volume of bids at a specific price, then that price is potential support. These concepts aren't difficult. All it takes is a bit of practice reading a level 2 screen. All right, that's it for this week. Leave all questions and comments below and we'll catch you on the next one.